Hey, welcome back for the final lesson here for Cashflow Quadrant. This is Ash coming to you for another great video. So I hope you're getting some value out of this. Hope this is changing your life for the better, moving you to a better financial abundance mindset. So here we go. Chapter 16, the 7 steps of finding your financial fast track. We're going to cover 16 and 17, the final chapters of the book Cashflow Quadrant. Here we go. Step-by-step blueprint for financial success. Kiyosaki provides a 7-step framework to help readers transition to the business owners, B, and the investor, I, quadrants, setting them through a path of financial freedom. Love it. Let's do this. Developing a strong financial mindset, he emphasizes that building wealth starts with changing one's mindset about the money. Readers are encouraged to think like investors and business owners, not just employees. So notice one thing he's talking about. You still have to have a little bit of the employee mindset because there's some activity to do. You have to be able to do some work in the beginning. But you're changing the mindset first before you're changing anything else. Let's continue. Setting clear financial goals. Kiyosaki stresses that importance of setting realistic yet ambitious financial goals, and as a clear path, clear goals keep individuals focused and motivated. I want to stop here for a second. This is very important. A lot of people I talk to, when they want to build a business, they say, I want to keep my goals realistic. Well, I'll tell you what, there's no unrealistic goals. There's only unrealistic time frames. So a goal is always attached to a time. You want to achieve something, you have to have a timeline when you should be achieving that. So ambitious goals means that it's maybe out of reach, but it's not out of sight. It's out of reach, but it's not out of sight. That's what you call an ambitious goal. A realistic goal is, for example, let's say you can do 10 push-ups. Your goal is to do 9 push-ups. Well, you're going to do 9 push-ups. You're used to doing 10. So big deal, right? But let's say you're used to doing 10 push-ups, but now your goal is to do 15 push-ups. It's out of reach, but it's not out of sight. Guess what happens when you reach number 10? Your goal is saying 15, but you're tired at 10 because that was your limit. But guess what? It's going to force you to do more. You might end up with doing just 12 instead of 15. That's what you call an ambitious goal. Ambitious goal is something that stretches you more than what your potential in your mind is what you're thinking about. Okay, I'll give you a quick story here. This is very important. They did a test of a rat. They put 2 rats, both in water, and guess what? They both were in water and they were drowning, and they know how to swim for a while, but after a while they were getting tired. Okay, guess what? One of the rats, what they did is they picked it up just before it was about to drown. They lifted it up. It was about 15 minutes it lasted. The other one obviously drowned. But this is the other example of that is that they took that same rat that they saved, and after 15 minutes when it was just about to drown, they put it in another tube of water. And guess what happened? After 15 minutes, you're not going to believe this, the rat, in their mind thinking that, hey, somebody's going to save me because last time at this time, somebody just pulled me out of the water. So I'm going to keep trying. Guess what happened? The rat kept trying, and it lasted over an hour. Over an hour instead of 15 minutes because it had the belief that it could reach the goal. So realistic, ambitious, emphasizing more on the ambitious than the realistic. That's the whole point of this. Identifying and seizing opportunities, he encourages readers to seek out, capitalize on investment opportunities, particularly those that generate passive income. You'll notice what I'm doing here is I'm highlighting some of the keywords, and I want you to remember this. And one of the ways to do is you attach the words that I'm showing you here. Capitalize passive income. Think about it. When you see an opportunity that you can get capital to and put it invested into a passive income opportunity, that's good news, even if the cost of capital may be having some interest tied to it. Talk to you about that later. Build a team advisor. Successful wealth building requires guidance. Kiyosaki suggests assembling a team of financial experts, or I would say business experts as well, all right, to support the decision making, provide expertise. Here we go back to this mentorship thing we talked about earlier in the previous videos. So somebody providing guidance, Sometimes people don't like to spend money on that. They like to figure out things on their own. They have sometimes a big ego. Well, I'll tell you what, big egos can cost you time and money doing it your way, especially if somebody's already been there and is providing you guidance. Investing in financial education, he advocates continuous learning about money, investments, and economic trends, which enhances one's ability to make informed financial choices. This is what you call calculated risk. When you know the numbers, when you know what the possibilities are, I'm going to talk about it in taking action here, you move forward in taking action, and this is where it comes. Kiyosaki concludes that the most critical step is action. He urges that readers take calculated risks and put their plans into motion, as action transforms knowledge into results. Knowledge, I should have also highlighted results, okay? But you know what I mean. So here's the thing, critical, connected with calculated risk. So critical means it's so important you got to do it. It's like oxygen. Can you live without oxygen? I don't think so, not for more than 3 minutes maybe. So calculated risk, something that you have figured out the odds of you winning. And you can do that by figuring out the numbers. And then you talk about knowledge. Knowledge always trumps money. If you have to exchange knowledge for money, I would always have knowledge called intellectual property, because that you can never lose. You can lose money. Somebody can, pull your money out of your pocket or something, or pickpocket you or steal from you. Knowledge, they can't extract that from your head, right? It's in your head. It's knowledge. You can use that. Think about it. Number 17, chapter 17, why it's time to mind your own business. Focus on your own business. We work in a job environment, most of us, 95% of the population, where we're working 9 to 5 for 40 years. That's called the 40-40 plan. 40 hours a week for 40 years, working for a company, another individual or company or owners that you're spending time on. Remember, think about it, 40 years. Sometimes people do 60 years. So it's now time to mind your business, prioritizing the growth of your own assets over solely working for a paycheck. So think about it. We're working for a paycheck, most of us, 9 to 5, but are we building an asset? No, we're just building ourselves, just cash flow to support and pay our bills. Here's the shifting focus from income to assets. He advises that readers to direct their energy towards acquiring assets. He talks about, the game Monopoly. If you ever played that game, what are you doing there? You're always buying houses and then a red hotel. Why? Because when somebody lands on your space, you get to make money. So acquiring assets produces income. Income requires time to make, like in a job. But assets don't require your time. The houses are just sitting there. A business is just sitting there and it's generating income while you're on the beach doing something else. So this is why you want to have assets. Think like a business owner, such as real estate, stocks, and intellectual property. You'll notice I emphasize on the intellectual property. It's even more valuable than real estate or stocks. I'll tell you why. Because the fact that you know something and how you can manifest that and build it out, you can make more money. Because real estate, you could buy in a bad area. You could buy a bad stock that goes down. But knowledge, the right knowledge, if you use it properly, can make you millions. That can generate passive income and lead to financial independence. So all are important, but I would rate intellectual property above else. And that's knowledge courses. So, when you're learning something about business, you're learning something about a topic that can make you money, that it can never go away. Build and protect wealth and protecting wealth. Robert Kiyosaki discusses the strategies for wealth preservation. This is huge. It's not just about making a lot of money or being wealthy, but how much of you get to keep it for long term. Like assets protection and tax planning, which are essential for maintaining long-term financial security. This is where that passive income comes in. How do you hold on to what you're making? That's another topic we can get into in another book, but this is the next thing you want to be learning is once you make the money, how do you build on it and keep it? So keeping it from going from taxes and from other expenses that may go down in value. Create multiple streams of income to reduce dependency on a single source of income. He encourages diversifying income stream. This creates financial security and amplifies net growth. I'm going to give you my 2 cents on that. I don't believe in multiple streams of income in the beginning, but after you've got the hang of it, then you multiply. I'll give you an example. If you've ever been to a circus and you see somebody spinning plates, they don't spin 2 or 3 plates at the same time, what does the person do? The acrobat guy, he puts on a pole and he starts spinning plates on one first. Make sure it's spinning fast enough. Then he sets up the next one. So multiple streams of income means you just don't go into it and start setting up multiple locations for your business or buy a bunch of, let's say, houses at the same time. You do it one step at a time, and that's how you are able to have multiple streams. Think long-term. Finally, Kiyosaki emphasizes the importance of long-term perspective. Minding your own business is a commitment to securing one's future through persistence, effort, and smart investing. I call it generational wealth. You want to be thinking of your business that you're going to be one day not be in this planet anymore. You're going to be passing it along. What are you going to pass along? Your job? It's hard to sell a job. It's hard to transfer a job. But you can pass along a business, pass along an asset. So think of investing in assets. Chapter 16 and 17 are readers' practical roadmap for financial success and underscore the importance of creating personal wealth. Kiyosaki insights are both motivating and actionable, pushing readers to take control of their financial futures and pursue true independence. So I hope you like these series. Give me a thumbs up. Make sure you share this information. Give me a good comment if you like. And I'll talk to you in the next great video. Make it a great day.